Now we get to the actual types of audit opinions. This is something that we've discussed throughout the entire exam, but the whole lesson on it is saved to the very end because I wanted to build this course out in a way that was the natural flow, the natural process of an audit. We started with engagement acceptance, the ethics, independence. We went into planning, then we moved into testing, sampling, and then testing, right? And then management's disclosures, assessing those. Now we're using everything before us to come to our final conclusion, which is our opinion. We have a couple different types of opinions. Well, really, we have a disclaimer of opinion, which is no opinion at all, actually. You're saying, I'm disclaiming it. I'm not giving you an opinion. We have qualified, which is problematic. I'll go over this in more detail. Qualified, again, here, we can see that again. And then adverse, which is really problematic. Then we have our clean opinion, which everything's good to go. Now, why do we have qualified in both of these circumstances? Because, and I'll just dive into the actual terminology in a second, but just to paint a picture for you, if there are issues with the audit, usually a scope limitation or which is like the client denying you access to something that you need to complete your audit, you can disclaim the opinion. But if you feel that you need to give a qualified opinion, which is an actual bad opinion, then you can. Now, that scope limitation, the audit issue, if it's material and pervasive or a scope limitation, then you can disclaim it. If it's material but not pervasive, you can issue a qualified opinion. If the financial statements are materially correct, there's no problems that are material, then you can give a clean opinion. There's no issues. And if there are issues, they are immaterial. Lastly, if there are issues, you can give qualified or adverse opinions. For qualified opinions, they're material but not pervasive. And the adverse opinion is material and pervasive and includes possibly a departure from GAAP. Now, pervasive means widespread or throughout the financial statements as a whole. Material is a different sort of circumstance, right? Material just means it's important, it's relevant to know, but pervasive means it affects the financial statements as a whole. So if just one account balance is misstated materially, that's a problem, right? So you would give a qualified opinion. If just the debt balance is misstated, materially misstated, you could give a qualified opinion. However, if there is such a problem that the debt balance affects everything on the financial statements, then that would be pervasive as well. And that would mean that you're going to give an adverse opinion. A point here is that issuers receive unqualified opinions while non-issuers receive unmodified opinions. Really not much different there, just a terminology difference. And throughout the exam, throughout the course, I've referred to them kind of interchangeably. This is where you want to memorize. Unqualified is for issuers, unmodified is for non-issuers. I can't say you're really going to get a question on that, but just being familiar, right? If you think to yourself, well, what's going on there? And really just the less confusion you have if you see something on the exam, the less you have to worry about, and the more you can focus on the actual question. Next, lastly here, we have a snippet that we were going to see from our authoritative literature in the context of misstatements or an inability to obtain sufficient appropriate audit evidence. The term pervasive is used to describe the effects or possible effects on the financial statements of a matter that, in the auditor's judgment, are not confined to specific elements, accounts, or items of the financial statements, or if confined, represent or could represent a substantial portion of the financial statements. Pervasive, this is something that was not really taught to me properly when I was studying, so I want to make sure that you fully understand it when we go here. Material just means it's going to affect your understanding of the financial statements. Pervasive means that it is an issue that affects the financial statements so deeply that there's just such a problem. Now, are you going to have to determine the difference between material and pervasive? Not really. I mean, you would be given thresholds, and they'd say, okay, materiality is $8,000, and something that would be considered pervasive would be, let's say, $20,000 of variance plus affects multiple accounts. I'm not going to really worry about that if I were you, but just understanding what it means as a whole so that you can go forward and answer questions about them would be. Here it is a little more clear, concise, just giving you a shorter version, more abbreviated version of what we just saw. Now, an unmodified opinion, right? We said that's clean, free from material misstatements, no issues. Qualified opinion, there's material scope limitation. Adverse opinion, pervasive, significant material misstatements, and departure from GAAP. You're just not following the rules at all, right? Big difference here. Qualified opinion, something's just wrong, or you have a scope limitation. Here, not only is something just wrong, but here you were following the rules, but something was wrong. Like the numbers were wrong. Here, you just completely didn't follow the rules. Like, in this case, maybe you were just actually, here's a great way to describe it. Qualified opinions were like you were speeding, right? You were just going above the speed limit, you got a ticket. Adverse opinion is like you're driving on the wrong side of the road. So I actually love that example. I remember that being used to describe it to me. Again, in qualified opinion, you're going 75 and a 60. Okay, it's a problem. You'll get a ticket. Here, you're going 75 in the wrong lane, which that's a pretty big issue. And then lastly, if you want to disclaim an opinion, kind of similar to withdrawing from the engagement, which the reason that's not here is because that's not a type of opinion, but you can either withdraw from the engagement, which means you don't give any opinion at all, or you can issue a statement saying that you disclaim an opinion. You're not formal statement saying, hey, you're not getting an opinion. I don't want to touch that with a 10-foot pole. And that would be because of a scope limitation. We mentioned many times before in the exam, whether it's the client not letting you access to certain employees, certain documents, or maybe certain third parties. What are some factors affecting audit opinions? And we're going to talk about this throughout the entire lesson. So here are some. We'll just keep rolling with them. The following factors are those which an auditor would consider when forming an opinion. Let me just summarize this up for you. Just, are they right? Did you do a good job? No, kidding, just kidding. The users of the financial statements will be able to understand them. Okay, makes sense, right? Can an average user understand the financial statements, right? We want to make sure you don't need a PhD to understand the financial statements. Is management fairly presenting the statements? We want to consider the accounting estimates that were used by management. And as you'll see, these are all items that we've seen in prior lessons. Management has made adequate disclosures, right? We saw this management's responsibility. Effects of misstatements on the financial statements as a whole. Whether or not the financial statements are prepared in accordance with the proper reporting framework. Are they prepared in accordance with GAAP? And these are items that the auditor would not consider when forming an opinion. The profitability of the client, we kind of talked about this in going concern, where it doesn't matter if the client's an absolute mess, if they're going under, if their profitability looks terrible. We don't care. If that's properly presented and properly stated in the financial statements, that's the whole point. The whole point is that the financial statements accurately represent how the company's doing. Lastly, the auditor's personal opinion of the client, its management, and other factors. Let's just say you just beef with management and don't like each other. That's not going to be grounds for giving them a bad opinion. They could be doing a phenomenal job. Maybe they're just very, very aggressive and just hard to work with. That's not going to play into the opinion, or at least it shouldn't. If it does, you're doing a bad job as an auditor, letting your personal trauma, personal beliefs get in there. Some deficiencies. Let's talk about the concept of deficiencies. When the auditor is considering making a judgment about whether or not a control deficiency, so just something wrong with the controls, is a significant deficiency, which is an actual term, which is defined and presented in a report to those charged with governance, he or she should consider the likelihood that a control will fail to prevent or detect a misstatement and the magnitude of the misstatement that could occur from the deficiency, also known as considering materiality. If you see that every month $5 gets miscounted because of a control deficiency, that's probably not going to be a significant deficiency. However, if you see that control is going to not account for possibly $100 million of cash being misstated, that's going to be material, and that would likely be a significant deficiency. But what's the difference? Again, this is just any deficiency in internal controls. This is a deficiency that would result in a material misstatement. Make sure you know the difference there. All right, powering through. Make sure you're stretching. Make sure you are getting some coffee, whatever you need to have the energy to get through it. We're going to see this again because I don't want you getting this wrong. I really don't want you getting this wrong. There are so many opportunities for multiple choice questions, for sims. I'm not a betting man, but if I were, I bet that you're going to get a sim on this. And if I also was a betting man, I bet that you'd get, I don't know, let's say no less than 5 multiple choice questions. That's not me giving you insider information. This is the core of the entire exam. It's just a very common, important thing to know for this. Now, the materiality of the problem, that's what we're looking at here. If there's no problem or the problem is immaterial, we are going to give an unmodified opinion or unqualified opinion. If the financial statements are materially misstated, right, there's no problem there. What about inability to obtain sufficient appropriate audit evidence? If there's no problem in your ability to obtain audit evidence, you're fine. Give them an unqualified, unmodified, clean opinion. Now, If the financial statements are material and misstated, right, material but not pervasive, we want a qualified opinion. And if the inability you had to obtain sufficient evidence, meaning audit issues, so there was a material amount of audit evidence you were not able to obtain, it's a qualified opinion. So you see here the differences. Here, the numbers are wrong in the financial statements. Here, the numbers could be right or wrong, it doesn't matter. You just were not able to get enough evidence to support possible opinion. You're going to give a qualified opinion. Now, if this is material and pervasive, if the numbers are wrong and they affect the financial statements throughout, you're going to give an adverse opinion. And if the problem you have of obtaining audit evidence is so significant that it affects the audit as a whole, you're just going to disclaim an opinion. You're going to say, I'm getting out of there. I don't want to give you an opinion. Goodbye. Have a good day. What are these types of issues? Well, this is tied to financial statement issues, issues with the actual statements as a whole. These are GAAP issues, issues with generally accepted accounting principles. These are audit issues, issues with how you conduct your audit, issues with your ability to conduct an audit. Generally accepted auditing standards issues. You see the difference there. These are issues with how you're conducting your audit or your ability to conduct it. This is issues involved with the financial statements and their presentation. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.Examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.